of finance at Stockton University. So to start off, Michael, I'll go to you here. How significant in your mind, is this uptick?
Not significant at all. So when President Trump entered office, the inflation rate was 2.9%. We did get it down to 2.4. August jumped up to 2.9. In September, we got it 3%. If you look at the number, though, the core rate has been going down. Most of that increase, now the core rate excludes energy prices. Much of that increase last month was due to two refineries in California that were shut down, and it pushed up energy prices. But as we know, energy prices have started to come down. OPEC has increased production starting in the month of September, so that'll put downward pressure on price. And the U.S. is producing more oil per day now than ever, mostly as a result of President Trump's drill baby drill policy. So I expect in the coming months to see that inflation number drop down significantly. President Trump says by the middle of next year, oil prices may be down as low as $50 a barrel. That'll translate into about $2.50 a gallon for gasoline. So any upward pressure on price from the tariffs will be more than offset by falling energy prices, and the overall CPI will continue to go down.
So Jeffrey, Michael addressed my concerns, but maybe you can speak to it as well, because we're back to a three handle on inflation. Are we in an environment of slightly elevated inflation and a softening labor market as well?
I wish I was as confident as Michael. I'm not that worried about gas prices right now, and I agree that the Trump administration's policies on energy have been an improvement. I mean, a dramatic improvement, really, in gas prices and energy generally. So I'm not worried about energy prices driving it. What I'm really worried about is the general trend. I've been written this for Epoch Times many, many times. The inflation tends to come in waves. Our last big experience in the 1970s went in three waves. Each time the Fed thought they had conquered inflation, lowered interest rates, and kicked off another wave of inflation until it culminated in the late 1970s. So if you think about the wave that was kicked off with the quantitative easing in 2020, we've been through a really dramatic inflation over the last 4 years that is anywhere between, I don't know, depending on the good or service, it could be as high as 50%, but as low as 20%, but maybe overall it averages at about 25, maybe 30%. It's hard to say. But the problem is that when you look at monetary aggregates right now, they've now exceeded what was their previous peak from 3 years ago. And I'm just not sure that it's all been washed out yet. And all of the policy pressures in Washington are towards lower and lower rates, which is only going to lead to a more expansionary monetary policy. The reason for that policy pressure is, of course, financing the exorbitant debt, which is completely out of control. So I am not as confident, and today I have to say it rattled me a little bit. I don't want to live in a world with even with a 3% inflation target. I'd like to see it drop back down to what it has been historically, 2%. That would be really nice, and I'll just be much more comfortable when that day arrives. Hopefully it does arrive, as your guest predicts, later this year,
right,
or later in the spring.
Okay, so Michael, if we look at all the data up to this point, what has been the trajectory of inflation?
So it peaked in June of 2022 at 9%, 9.1%, continued downward, got stuck around 3, and then dropped down to 2.4. Now the last 4 or 5 months, it's inched back up again for a number of things. But the underlying causes of inflation are being mitigated. The huge government deficit has caused a lot of inflation. President Trump knocked it from a little over $2 trillion per year to in fiscal 2025 down to $1.8 trillion. And it should continue to go down further as, although it's extremely difficult to cut government spending, as we're seeing. But President Trump is doing what he can to get government spending down. He's increased tax revenue from the tariffs so that